Are we on the brink of a big spike in unemployment? Well, there's been a lot of headlines lately showing layoffs are starting to pile up around the economy. We've seen a lot of layoffs in the mortgage industry, in the crypto industry, and we're starting to see a lot of the big tech names are starting to lay people off. So if you go by these headlines, it really looks like we're on the brink of a rise in unemployment. We're going to look at some of these headlines and see just how many jobs are being lost right now, and then look at how the data is measured to see when is this actually going to start showing up in some of these government reporting mechanisms, which is when it would actually start affecting markets. And for that, we have to shrink my big melon of a head. And I have got my man, the moderator, Mish, is here because anytime we are getting into numbers and charts and data crunching, Mish is like number Johnny Five. He just craves input, and you give him a bunch of numbers, and he will just tear into it like a dog tearing into a bone with
Yeah,
some meat left
I
on it.
love a good sit down and with statistics and a chart and numbers, and I'm happy, man. Not gonna lie, I
Absolutely.
love it.
Well, tell me what you think of this. First off, this is something we looked at. This is Google Trends.
Mhm.
This is people Googling layoffs.
So this is so we're gonna start to talk a lot about leading and lagging indicators. This is a leading indicator because people are worried about it prior to it happening. So they're starting to hear rumors in their business or their company, so they're going to start searching layoffs, which is what we're looking at right here.
We talked about it right before we started filming. Who would Google layoffs? There's guys like us that are just craving data, or somebody who just got laid off, or is about to get laid off, or
Okay.
works for a company that's laying people off. First of all, one thing I got to point out here: this big spike in December of 2021. All right, that's a kind of a fluke in the data. That was the Better.com story. I don't know if you remember in December there was this story that Better.com called a Zoom meeting, and the CEO was a real jerk, and he just said, "Hey, everybody on this call, you're an
Yep.
underperformer and you're gone," without any warning, like you're
Right.
fired today. So that was like the biggest story in the country for a couple of days. So everybody was Googling layoff or something involving layoff that week. That was kind of an outlier in the data. However, you notice here, Mish, starting about April 3rd, the week of April 3rd to April 9th, was a notable bottom in this chart. And the trend for searching layoffs has been steadily climbing ever since.
It's higher highs every week.
Higher highs, higher lows, even. So people are showing more interest in the term layoff. And why could that be? Well, let me just give you a couple of data points of this last couple of days. Right? These are all stories that came out in the last couple of days. Here we go, right here in the New York Post, dated June 22nd. J.P. Morgan reportedly laying off hundreds in their mortgage business. And this is on top of Wells Fargo. Earlier this year, they started laying off hundreds in their mortgage business. Right? This is the financial markets anticipating a turnaround in the housing market. We talked about the MBS market and how inflation was killing the mortgage industry in a
Right.
video last week.
And I think, even though we saw a little bit of a jump last week, I think that was more a Fed response to the numbers going up, and we'll see them go right back down this week. So that was a blip.
Yeah, we did see mortgage rates come back in a little bit this week, but I think in the long run that will be just a little downtick in an otherwise
Right.
upward trend. But moving on from this one, we've also got this story. Massive layoffs hit one of the top U.S. aluminum plants, halting operations again June 22nd.
Well, I think this one's very important because it's a smelter they took down.
Yep. So that's, base metal supply getting limited. Also, check it out here. Citing an unprecedented rise in global energy prices,
Yep.
inflation squeezing producers, Century Aluminum in Kentucky announced that they'll be laying off 628 Hawesville smelter employees starting on August 5th. And in fact, mass layoffs are happening nationwide as fears of an economic downturn continue to escalate. That's a pretty big data point right there.
Anytime you start having an infrastructure company shut down, and I think a lot of us have been worried about the farms and the food production. Well, we need to start looking at things like this too, because once we start losing our base production, much like gasoline, we can never catch up again. If we do not continue buying or building, we're never going to catch up with consumption. And I think something like this going down, and I want to say they made 600,000 units a year,
Yep.
and it's just gone now.
And this is something we saw late last year in Europe as a lot of the zinc smelters and the fertilizer plants, we saw what was happening in Europe. The energy costs were getting so high it was putting producers out of business. It looks
Mhm.
like that's starting to spread over here now. Moving on in this one, we've also got Coinbase. And this is June 14th, so this is about 2 weeks ago. Coinbase announces 1,100 layoffs as the CEO warns of a recession and crypto winter. And obviously, it's been no secret. We've talked about it a lot on this channel. There are some serious deleveragings happening in the DeFi space and the crypto space. 1,100 layoffs at just this one company. That's a pretty significant number. Moving on from there, just when was this? June 23rd, Netflix begins second round of layoffs. 300 positions cut, right? We've done a lot of videos about Netflix 2 quarters in a row, just awful, awful
Awful
earnings.
numbers.
And back in January, when Netflix reported their first bad quarter, I called it back then. I said, the era of big tech is dead, that these higher rates are going to start putting these companies out of business. Maybe Netflix isn't about to go out of business, but 300 positions being cut at a company that is notorious for blowing huge wads of cash on new content and expanding studios and everything else. Well, now these companies, they need to get lean because they can't just access the debt market for financing. And I think Netflix learned their lesson in their last quarterly report, which was just awful, the subscriber losses that they had, that Netflix no longer has the pricing power. They can't just raise their monthly subscription rate. People will cancel their service. So they need to lay off employees. Moving on, we've got another one, Tesla. Job cuts include workers who joined the company weeks earlier. Elon Musk's abrupt dismissals suggest a strong run of execution has come to an end. This is about a 2-week-old story, and I want to give you a soundbite here. This just blew me away when I read this. Elon Musk described the new factories opened recently near Berlin and Austin, Texas, as gigantic money furnaces, losing billions of dollars. It's a guy who just invested billions of shareholder capital and billions of borrowed money into building these factories, and now he's calling them gigantic money furnaces.
The price of the base metals are outstripping their ability to keep up with wages and the price of their cars. So yeah, they're just going to be losing money.
All right, so there's a lot of your anecdotes, right? There's a lot of big names there. JP Morgan, Coinbase, Netflix, Tesla, right? A lot of the companies that kind of personified this monster bull market of the last 20 years.
And now this is only 5 minutes of searching, guys. We spent very little time actually pulling these up because we wanted to do a quick search to show that we could find these numbers right away. So we did this search in less than 5 minutes.
Think about also how many companies are out there that have, say, 10 or 15 employees that are laying off a handful of people. They're not going to make headlines, but that's happening en masse right now. All right, so now let's get into when are we going to see this in the data, right? Now, there's a couple of ways we measure data. You've got initial jobless claims come out every week. You've got 4-week moving average of initial jobless claims. You've got continuing claims. And then you've got the big headline, the unemployment rate. So let's talk a little bit about initial jobless claims, Mish. Tell me what we're looking at here on this chart.
Okay, so for background, I was an unemployment adjudicator for a period of time. But what you're seeing here is once a person gets laid off, you don't apply the week you get laid off, so you apply the next week. Then they make you wait a week to get on the roll. So you're looking at 3 weeks there from layoff to actually getting to this number. So what we're seeing right now is May's layoffs.
All right, so an uptick in initial jobless claims. Say tomorrow there was a report. That's actually somebody who lost their job
2 to 3 weeks ago.
2 to 3 weeks, end of May or beginning of June now.
Mm-hmm.
Now, looking at this chart right now, obviously initial jobless claims have been trending down all through 2021, right? The great resignation and the big imbalance and the tightness in the labor market, right? But now look, pretty clearly, we've shown a bottom right around the end of March, the beginning of April. That's like realistically about April 2nd is the data point here on the initial claims that shows a bottom. And just to harken back to that first chart we showed, check this out. When did we have a bottom, or when did we start to turn upward on this Google Trends? That was the week of April 3rd to April 9th.
Yep.
So this Google Trends, people searching the word layoff, this is a pretty good data point here. This is really tracking initial jobless claims pretty closely. I found that very interesting to see just how good of an indicator these Google Trends really are.
Yeah.
And hey, there it is. I mean, it's not a huge move, but we very clearly bottomed at the end of March, early April, and since then, initial jobless claims has been very slowly ticking up.
Right.
Now, the next data point we've got is the 4-week moving average initial claims. Tell me a little bit about this one.
Yeah, and this is kind of in the title, but as the initial claims get bigger and bigger each week, just like any moving average, we'll start to see it kind of drift up. And what we're seeing here is it's gone up about 15,000 a week for the last 2 weeks. So it's 230,000, then 229,000, which has raised the average enough to get that whale tail kick. And I think so this little bottoming pattern that's going on here is about to go like that.
So every 4 weeks, you have the number from 4 weeks ago drops off,
Hmm.
and the new number comes in. We take the average of those four, and we continuously move. And again, there's your bottom, April 2nd.
So right now we've got two at 230, essentially a 230 and 229. The previous to that was around 215, and the one previous to that was a similar number. So those 215s are about to start dropping off higher numbers. So this is about to dramatically increase.
So that's your 4 week moving average of initial claims, but we're still talking about initial claims,
Mhm.
right? When someone joins the initial claims, it's 3 week old data.
Right. So you have the 3 week old data, and this is 4 weeks late from that 3 weeks late.
The average of the last 4 weeks of 3 week old data.
Right.
Got all that? Let's move on. Let's talk about continuing claims because we get that data point every week also.
Okay, so week 1, week 3, you get your check, right? The first week you have unemployment. If you get a second check 1 week later, you go on this chart.
Okay, so continuing claims is somebody who didn't go out and find another job right away. They've been unemployed for at least 2 weeks.
A month by our reckoning.
A month. That's right, because they've already been unemployed for 3 weeks by the time they're on the initial rolls, and then another week after that before they go on to continue. So this is someone who's been out of work for a month.
Right.
All right. So this chart, interestingly enough, has not started moving up yet. Sorry, Mish, I'm going to move your melon a little bit here, brother.
Fine, yeah.
This chart has not yet started moving up. This chart has bottomed.
Which you wouldn't expect it to, because this one is 4 to 5 weeks behind. Right. So you have your 3 week initial. You have this number, which is 4 to 5 weeks behind, and then you have the 4 week moving average, which is a moving average that starts 3 weeks behind and ends 7 weeks behind. So as you see this flow go through, you have the initial claims that are started to pick up, the average started to pick up. You'll see this continuing claims start to pick up this week.
And we've seen 2 consecutive weeks at basically 1.31 million, 1.310, 1.315, right? So this is still your late April, early May numbers that we're seeing in the continuings. Now we're going to get more into the late May, early June numbers,
right,
which, going back to the other charts we saw, they're going to start ticking up. So we're going to see continuing claims on the rise.
Mm-hmm.
All right, so that's the weekly data. We talked about initial, the 4 week average, and continuing. But the big headline number, the one that moves markets, right? The one that has the guys on CNBC talking headlines, and the ones that actually will move the S&P or move the Dow, right? The headline unemployment rate. This one also hasn't moved yet. We're actually at a historical low right now. We've had 3 consecutive months of 3.6% unemployment, which is amazing, right? That's historically very low. It doesn't get much better than that. So unemployment still hasn't moved. And again, I want to take you back to the initial claims. We're seeing the initial claims are starting to tick up. We're seeing the 4 week average is starting to tick up. But unemployment still hasn't moved. When are all of these layoffs that happened in the last couple of weeks, and really they started late April, when are these layoffs going to start hitting the unemployment rate?
So we're going to see another number in July 8th, which is the next monthly number that comes out. I fully expect that, based on the weekly numbers, to go up a tick. Not much, 0.1, 0.2, so 3.7, 3.8, right around there. But I think that August number is when you're going to really start seeing the kick, the whale tail.
The number that comes out July 8th, which will be the June unemployment, and knowing that the June unemployment really reflects people who started to lose their jobs
in May,
we'll start to see that in July, you think?
August is going to be disastrous.
By the August number, we will have had 2 or 3 consecutive months of steady job losses.
August, we have June's numbers coming up.
Yep.
Which we know the layoffs have gone up.
And all those headlines we just read, those were all June numbers.
Right. So in July, we'll start seeing the layoffs from what's going on right now. So we're going to start seeing that all just kind of start coming up a little, and then it's just going to.
So long story short, folks, we've got a lot of headlines right now starting to scream layoffs. We showed you the Google trends. People are searching layoffs because they're getting laid off, or they're worried they're going to get laid off. That's a leading indicator. A lot of the early indicators, like initial jobless claims, the 4 week average initial claims, and the continuing claims, they've already started to move higher. And the headline unemployment rate, which lags a little bit, should start moving higher next Friday when that number comes out.
Which is after the holiday again.
Again, politically convenient, just after that 4th of July holiday.
Yeah.
So get used to the words layoffs and unemployment. This looks like the beginning of a trend. And then there's that big R word, recession. Will we officially enter a recession in the second quarter? I don't know.
We're going to get those GDP numbers in July, and it may show us that we've been in a recession for 6 months. I honestly think we have. But yeah, I think we're really going to see those numbers.
So, folks, this is just part one where we're talking about layoffs and unemployment and when we can expect to see the unemployment numbers start to move. Tomorrow, we're going to do another one about when we can expect that unemployment to start showing up in the housing market in the form of new supply being dumped on the markets and a possible uptick in foreclosures. You might be surprised on when we start to see that happening. Mish, anything you want to say?
Spay and neuter your pets, man.
All right, folks. Till next time, live small and dream big.